Hey guys, it's Seth and Paul with the Everything Money channel. Welcome back. Today we're looking at MSG Networks, MSG in stock. I bought this stock unbeknownst to me. I followed the little book that beats the market by Joel Greenblatt. I bought this stock on July 1st of last year. I'm up 58% since that time, Paul. 58% since I bought this in July. This is one of the stock screeners for the Magic Formula Investing, which Paul turned me on to. But we got a lot of requests, both on the live stream and in our wonderful, beautiful Patreon group. Smooches those patrons, you know I love you, but you guys are incredible. But anyway, welcome in. You are going to learn the financial health of MSGN. We're going to talk about the PE ratio, the profit margin, the revenue, the profit, shares outstanding. Look at their free cash flow. What is this company a buy? Is it a void? Should we dig deeper? We're going to look at the financial health of this company, and we're going to have our Uncle Paul tell us right now. Paul, how are you doing in your beautifulness?
I'm doing wonderful. Guys, check out that our video on the little book that beats the market. Seth is up 50% since July 1st. The market's up 26 or 27%. So he's crushing it over there. I don't believe in looking at a short-term result as this is epic. But at the same time, it's awesome that he's doing this well. And it's a great way to invest in 25, 30, 40, 50 companies with a structured process in place.
Yeah, this is one of them. I basically built my own ETF of a basket of companies, and I didn't actually know what this company was, Paul. Someone requested it, and then I found out it was in my portfolio. And when I bought it, it didn't really matter because I was just following the little book that beats the market, and apparently I did that so far. So let's get into it, Paul. What is the market cap for MSGN?
Okay, so now we're going to be using our 8 Pillars website that we have. We'll talk about more later, but our Patreons get free access to this website with their Patreon membership.
When it's released on April 15th.
When it's released
Paul.
on April 15th. Thank you very much.
So instead of using Y charts or Yahoo Finance, we're using our Everything Money website. Go ahead, Paul. What's the market cap, baby?
Almost $1 billion, $925 million. They have a PE ratio. You ready for this, Seth?
Go on.
5.25.
Oh,
check mark there. We want a PE below 20. This is 5.25. Now, guys, I want to reiterate something. That doesn't mean go out and buy it.
No, I'm buying it, Paul. I don't care what you say. I'm going right now. I'm headed. Buy more, Don. Buy to buy. I'm sorry, Paul. I interrupted. Go ahead.
This is a good thing, but we have to understand what's the future of that PE. Is their profit going up, down, sideways? This is useless if the company's going under tomorrow, right? This is absolutely useless. So we have to. None of these 8 pillars are an automatic buy or sell. It's looking at the whole picture together. We don't do any research on the companies ahead of time. This is our way of screening out companies. So,
what is pillar number 2 is the profit margin. What's that, Paul?
We want this above 10%. 28%. We want it above 10%. It's 28%. It's a network. They're going to have high margins. I mean, once they make the content, it's about generating ads and things like that. So far, we have 2 check marks on this company.
2 for 2. Pillar number 3 is revenue growth over the past 5 years. What is it, baby?
Now, one of the great things we do with our software versus other ones, we clump everything into 4-quarter increments as opposed to the full year end, which can be delayed a while. So 5 years ago, 507 million. Last year, 640 million. Check mark there, Seth. That's a big jump. That's almost 30% increase in revenue over a 5-year period for a pretty mature business.
Me likey. Pillar number 4 is profit growth, baby. What are we talking with profit the last 5 years?
Barely up. 176.9, 178.72. It is still a check mark, though, even though it's barely up.
Okay, I like
that. Still a check mark.
How about pillar number 5 is shares outstanding? We want them to be buying back shares, Paul. We don't want to dilute us with more shares.
They are buying back shares. 300 million down to 231. A big drop, over 20% drop in shares outstanding. And I like this a lot because of how low their PE is. They're buying shares at a depressed level, which is a good time to buy shares. I don't like it when companies buy back shares at very high valuations. They're using their cash for a bad investment.
I'm checking my pulse, Paul, because we got 5 straight checks heading into pillar number 6, which is current assets over current liabilities. Baby, give it to me.
Check your pulse. 410 million for current assets. That's cash on hand. Current liabilities, 78.6. Another check mark, folks.
That's 6 straight, baby. This is wunderbar. Pillar number 7, Paul, is your favorite free cash flow. This is cash from operations minus capital expenditures.
And you're going to explain to us why free cash flow matters.
Yeah, so they have to have free cash flow to pay us their dividend. Yep. They can make acquisitions. They can buy back shares. They can do a lot of great stuff with free cash flow, and you don't like the company if they don't have a ton of it.
I like free cash flow over PE and over earnings. And the reason being net income on the income statement can be manipulated with all these rules from the IRS and all these SEC. I prefer to go to free cash flow. It's harder to manipulate. and it shows you after the company invests back into itself with its capital expenditures, how much cash is left over to do the big things that we need as a company, as an investor in that company. So, first things first, you go to the last line of the cash from operations, operating statement, and you look at the cash from operations right over here. The very next line on the first line of the investing cash flow section is the net change in capital expenditures.
Go on.
45 minus 3 is $42 million to 5 years ago. Last year, $238 million. Check mark there. Guys, they spend a very, very small amount of their cash from operations on capital expenditures. That's awesome. That means they don't need it. They're not a capital intensive company. They don't need a lot of money to go grow, maintain their business. They can spend the extra cash flow on growing their business. Okay? Now, for an average for the last 5 years, 195, 195, 187.
The average free cash flow over the past 5 years is 171, Paul.
I'm going to eliminate that 5 year ago number. Let's just get rid of it.
42 mil?
Yeah, I mean, that's just stupid. It's such an aberration. I'm not even included. Just like if this was $1 billion in the middle, for some reason, I'd get rid of it. So in the last 4 years, they've done roughly $200 million a year.
Yeah, a little bit over that. Yeah, $203 million of
Okay.
free cash flow. Good Lord.
Now, we want it to be, we always say the PE needs to be less than 20. Over long periods of time, PE and free cash flow and earnings should be the same. So we want to look at the same multiple. 200 million times 20 is $4 billion. It's currently selling for under $1 billion, 925. This is all 8 check marks. This is an 8-pillar thriller.
Oh, that was way too loud. Sorry, everybody. Don, did you hear that? I went bonkers with the air horn. This does not happen often, so I'm going to hit it twice.
Guys, this is incredible. This is a company.
And now let me slow Paul down here now. So basically, Paul, you came up with the idea that you think, judging by their free cash flow they make on a yearly basis, this company should be somewhere in the range of a market cap of $4 billion, and they're under $1 billion, massively underpriced in comparison. And look at the price of the stock, Paul. It's $16 today, but just 2 years ago it was $26, a massively low jump. I bought it at around, good heavens, Paul, I bought it at around $9. Is this still a buy? This is incredible. Not all the stocks meet our 8 pillars, and when it does, it's rather exciting for those at home. So
I believe there's only 18 stocks out of the 3,500 that we have data on that hit all 18 that are not. We exclude utilities, energy, insurance companies, and banks because their financials are totally different. Here's what I'll say, guys. I do believe that long term, sports networks will be a very, very valuable commodity, and here is why. As we become more of a streaming society, what's the one thing you cannot avoid in sports? Commercials. Because you're watching sports live, right?
Yep, and you can't turn away.
You can't turn away. Every other show out there, you can just okay, I'm going to record that, I'll fast forward the commercials.
Yep.
But sports, no. As a little backstory, the NBA had a new agreement several years ago with the players because the revenue from their advertising skyrocketed because people saw the value in sports for advertising because everybody watched it. Nobody records the Super Bowl and says, don't tell me. In fact, when I have friends who say I'm not watching the game till later, I'm like, what are you doing? Are you avoiding the internet completely? You cannot avoid sports and advertising. I'm a very big believer in that. With that said, this is also a network in New York, New Jersey, parts of Pennsylvania, etc. This is a huge market with very avid fans. I'm a fan of this. Now, what can you do to buy this company? Should we look at the options, Seth?
Please do, because I'm firing up Fidelity right now and putting my quantity in as to how many I want, Paul. I'm doing it right now.
You already own some.
I want more. I don't even care.
Are you serious?
I'm absolutely serious.
You're buying some right now.
I'm doing it right now. Go ahead,
Okay.
Keep going, Paul. I don't even care.
So guys, what I do is whenever I want to buy a company, I will sell puts on it. What that does is I'm selling the right for someone to put the shares into my hands at a certain price at a certain date in the future. So right now the company is at $16.18. If I'm happy with this price, I could buy it today, or Seth,
go on.
Why don't you sell puts on it?
Well, that's a good point, Paul. I was about ready to press, or I was about ready to go through with about $5,000 of this, but what do you think?
Okay, so instead, what you could do is say, hey, I'm happy at this price. But let's say on March 19th, I can sell at $15 I can get 80 cents to sell the right for somebody to put these shares in my hand. So I'm going to collect 80 cents. Seth, what's 80 cents out of $15?
I have no dang clue. You know I'm not good at math.
That is roughly 6%.
Oh, I see. 0.8 divided by 15. Gotcha.
6% on your money to wait 37 days.
5.3%.
Okay, 5.3%. 5.3%. You're going to make 5.3% of your money for 37 days. That's equal to 53% per year. You're going to buy the stock anyway today.
Yes, I was just about to press the button.
Why don't you just wait and do 60? Or by the way, if you're okay at $17.50, collect $2 on it.
Come on.
Yes. So now you can collect $2. If it's below $17.50, you're going to get the shares at $17.50, but you already collected $2. So you're essentially getting the shares for $15.50 today. So why would you ever buy the shares immediately? Sell puts on it. Now the reason you can't all the time is you have to do 100 share increments. You can't do them at 2 shares, 3 shares. You got to do 100 shares at a time. So Seth, the idea here is if you sell, let's call it, if you want $5,000 worth at $17.50, what's $5,000 divided by 17?
I mean, I can do almost
300.
3 contracts.
So 3 contracts. You're going to collect 3 contracts at $2.10. $2.18 is $654. You're going to collect $654. If the stock ends up above $17.50, you keep your $654. If it goes below if it's below $17.50, stays there, you keep your $654, and now you're buying the shares at $17.50. So you're paying more. Let's say the stock is at 15, but you also collected $2 and whatever cents per share. So you essentially made money on it.
This is incredible, Paul. Folks, if this resonates with you, if this sparks, tickles your fancy, we obviously want you to tickle that thumbs up. We super appreciate it. If this resonates, you can join our Patreon. The link is in the description below. Trader Mo, our active day trader, can help you with these options. He's in the middle tier, and you can learn just what I just learned right now. I was literally going to press the button to buy more because this company really excites me. I already own it. It's done well for me. And Paul shows the idea of selling a put option on this. And boy, Paul, I am really fired up on this puppy. We'll do this right after we get off the air here.
It makes sense because you can even do February 19th at You can do February 19th at $17.50. You're going to collect $1.53. So if you get placed the shares, you essentially paid $15.97. What is the price today? You're going to save 14 cents a share because that's at $16.11 right now.
Yeah, okay.
So if you're a little bit patient, you want to generate some income and still own the shares, do this.
I love it.
It's a great way for you. Now, you're going to be looking at this going, holy cow, that's a lot of information. Options take a reframing of your mind. It takes a little bit of, wait, what am I doing here? We will cover more of it as time. The most important thing we hear from the patrons is, 1, can we learn more about options? And 2, we love options. We have patrons that all say, oh my God, we have patrons making $4,000 or $5,000 a month on options since they joined our Patreon.
Absolutely.
So they pay us $100 a month and they make $4,000 or $5,000 a month on options for it. We literally have people making, and I'm doing options to a huge level. And I love it. I think it's a great way to generate income and also buy the shares that you want at the prices you want of the companies that you want.
Our lowest level Patreon is currently $12. When it fills up, that price will go up. You will get the software. You will get access to the Discord community. You will get to interact with Paul and I at our Patreon-only live streams and live discussions we have. And you can learn more about these options. Paul, my mind is blown. Final take on MSGN.
MSGN, I love it. Go do more research on it. Make sure it's got a good future. But I'm definitely going to do way more research about it.
If you join the Patreon as well, we are giving away 2 Teslas in the next coming months. Once we hit 50,000 YouTube subscribers, we're giving a Tesla away to one of the patrons, and we're going to do it again at 100,000. Yes, that seems absurd, but Uncle Paul's paying for it, so let's all get on the train and enjoy this. So, yeah, I love you guys. MSGN, I love it. I can't believe, Paul, it's what a great stock.
Oh, this is great.
This is exciting. And, yeah, let's get some calls on this right now. And, guys, see you on Patreon. We love you. Oh, puts.
Yeah, puts.
I love you, Paul. Thanks, guys. See you. Appreciate it.